Welcome to Section 6 of the Payroll and Workforce Cycle Training for P&J Group. This section is your guide to contractor accounting entries, controls, and risk. Once you have classified a worker as an independent contractor and completed the onboarding steps covered in earlier sections, the accounting treatment, controls, and risk landscape shift significantly from the employee track. We will walk through the journal entries, the preventive and detective controls that protect the organization, the key risks to watch for, and the performance indicators that keep the contractor program healthy. By the end of this section, you will be able to do 5 things. First, record the correct journal entries for contractor invoice accruals and payments, including payments that require backup withholding. Second, explain why contractor payments are processed through accounts payable and never through payroll. Third, describe the preventive controls that stop misclassification and payment errors before they occur. Fourth, identify the detective controls that catch problems after the fact. And fifth, recognize the highest priority risks in the contractor program and the KPIs used to monitor them on an ongoing basis. Before we look at individual journal entries, one principle is worth stating clearly because it drives everything else in this section. Contractors are never processed through payroll. They are vendors. When you pay a contractor, you debit a contractor or professional services expense account, a GL account that is separate from payroll wages, and you credit accounts payable, just as you would for any supplier invoice. There is no payroll tax calculation, no benefits deduction, and no W-2 at year-end. Setting a contractor up in the payroll system instead of the AP vendor master is itself a significant control failure and a strong misclassification indicator. When a contractor submits an invoice and it is approved, you record the accrual. Debit contractor or professional services expense for the full invoiced amount, coded to the department receiving the services. Credit accounts payable contractor for the same amount. The expense account used here is a GL account distinct from payroll wages, as specified in Part A08 of the Handbook. This entry should only be recorded after the requesting manager has confirmed that the deliverable described in the statement of work has actually been completed. Invoice approval is not automatic. It is tied to confirmed delivery. When payment is made to a contractor who has a valid W-9 on file, the entry is straightforward. Debit accounts payable contractor to clear the liability. Credit cash for the full invoiced amount. Notice what is absent here. There is no tax withholding, no FICA, no federal or state income tax deducted. The contractor is responsible for their own self-employment taxes and estimated payments. This is one of the most visible distinctions between the employee payroll process and the contractor payment process. The organization pays the full invoice amount with absolutely no deductions taken at the time of payment. Backup withholding is a special case that only applies when a contractor's W-9 is missing or contains an invalid taxpayer identification number. In that situation, the IRS requires the company to withhold 24% of the payment. Debit accounts payable contractor for the full invoice amount. Credit backup withholding payable for 24% of the payment. Credit cash for the net amount actually sent to the contractor, which is the invoice total minus the withheld amount. This is not a routine entry. If you find yourself recording it frequently, that signals a breakdown in the W-9 collection process upstream. When backup withholding has been collected, and it is time to deposit those funds with the IRS, the entry is simple. Debit backup withholding payable to eliminate the liability that was created in the prior entry. Credit cash for the federal deposit amount. This follows the same logic as remitting payroll taxes to the IRS, but it originates from the AP cycle rather than the payroll cycle. The key point is that once you have withheld backup withholding, you are obligated to remit it promptly according to IRS deposit rules. Holding it in the payable account indefinitely creates additional penalty exposure. Preventive controls are the guardrails that keep the contractor program clean from the very beginning. A classification decision memo is required before any new engagement begins. You cannot recruit or solicit a contractor without it. No payment can be made without a valid W-9 on file first. The IC Services Agreement and Statement of Work must be signed before work begins. Verbal agreements are not permitted. Contractors are set up only in the AP Vendor Master, never in the payroll system. Employee benefits are explicitly excluded from every contractor agreement. The person who sets up a vendor record is never the same person who approves it, and every contract renewal triggers a fresh classification test. No auto-renewals allowed. 2 additional preventive controls deserve specific attention because they protect against cost overruns and fraudulent invoicing. Contractor invoices are only approved after the requesting manager confirms that the deliverable described in the statement of work has been completed. This is a substantive review, not a formality, and the SOW budget is actively tracked. No payment may exceed the authorized SOW maximum without a written amendment. This means every invoice is checked against what was actually authorized before payment is released. Together, these 2 controls ensure that what you pay for was actually delivered, and that you never pay more than what was originally agreed and documented. Even with strong preventive controls, detective controls are essential because some errors only become visible over time. The contractor year-to-date payment tracker is reconciled to the AP payment ledger every month. IRS TIN matching is run on all contractor TINs before year-end 1099 NEC filing. An annual classification review covers all active and recently expired engagements. The 1099 total is reconciled to the GL contractor expense before filing. Monthly reviews check whether any contractor payments landed in payroll GL accounts by mistake. Quarterly reviews flag vendors approaching the $600 1099 threshold who still lack a valid W-9. And long-running engagements are periodically reviewed for reclassification risk. The Contractor Program Risk Register contains 8 risks, 5 rated high. The most consequential is a contractor functioning as a de facto employee, open-ended engagement, set hours, company equipment, and no retesting at renewal, exposing the organization to back payroll taxes, penalties, overtime liability, and benefits claims. Second is paying a contractor without a valid W-9, which triggers missed backup withholding and IRS penalties. Third is offering or implying employee benefits to a contractor, which is the single strongest indicator of an employment relationship. Fourth is processing contractor payments through payroll. Fifth is a state ABC test violation in strict test states like California, New Jersey, and Massachusetts, which can trigger full employee rights from day 1 of the engagement. 3 additional risks complete the register. Failing to file or filing, the 1099 NEC late carries a perform IRS penalty that escalates for intentional disregard, and it is rated high because the January 31 deadline is firm and penalties scale with volume. A TIN mismatch on the 1099 NEC, typically from an unverified W-9 or data entry error, is rated medium. It generates an IRSCP 2100 notice and requires backup withholding on all future payments until the TIN is corrected. Finally, paying a contractor through an unusual channel such as a one-off wire or reimbursement that bypasses the standard AP vendor record risks leaving those payments out of the 1099 totals entirely, also rated medium. 8 KPIs keep the contractor program under active measurement. W-9 completion rate before first payment is tracked per engagement and tells you whether onboarding documentation is in place before money moves. Contractor classification review rate measures the percentage of active engagements reviewed against IRS and state tests in the past 12 months. 1099 filing timeliness measures whether all 1099 NECs are furnished and filed by January 31. The 1099 to GL reconciliation variance flags any gap between what was filed and what the ledger shows. Engagements without a defined end date counts open-ended SOWs quarterly as a reclassification risk signal. Invoice cycle time, SOW budget utilization, and the contractor versus employee cost ratio round out the measurement framework. Here are the essential points from Section 6. Contractor payments always flow through accounts payable, never through payroll, and the expense hits a GL account separate from wages. The standard payment entry has no withholding. The 24% backup withholding rate only applies when a valid W-9 or TIN is absent. Preventive controls begin before day one with a classification memo, a signed agreement, and W-9 collection. Detective controls run monthly, quarterly, and annually to catch what preventive controls miss. The 5 high-rated risks all trace back to one underlying failure, treating a contractor like an employee. 8 KPIs provide ongoing visibility into program health. In Section 7, we bring both tracks together for case scenarios, red flag identification, and process improvement guidance.